Welcome back to another one of my random but very impactful videos on trading. Today I'm going to be talking about the two ways that we can trade this market. I'll show you one and then I'll try as much as possible to explain the other. The very first one is having a holistic understanding of the entire market. And what this simply means is understanding that each and every one of these candles you see here, they are psychological mirror of human behavior. Each and every one of these candles shows our greed, our hope, our fear. Every single thing is being imprinted with this candle. If you understand this fully, you can place yourself properly to know what is expected when a particular thing happens. Technical analysis is not just a complete understanding of fundamentals, but rather is a understanding of human behavior, what people would do when they see a certain thing, whether they will panic or they will be happy to see that thing. So all of this support and resistance you learn about, they are just blueprints, things that makes us act a certain way when price get to that point. The second way, which most traders usually do, is looking at the market from the point of if something happened, something else is supposed to happen. In the case of this support here, if price gets back to this support, what is expected to happen? That's the second way to look at the market. The reason why this second approach is different from the first one is simply because there are a lot of times where things like this would happen and it won't play out the way you would expect. Yeah, we're expecting it to get to this point and then bounce off of it, but it didn't play out as expected. Having a holistic understanding would let you understand exactly why this happened. And from the look of this chart, you would understand easily that it happens because the pullback is not deep enough for this to play out. But for the other point of view, the other way of trading, we don't care. We don't care. We just want it to hit here and go up. We don't care if it's deep enough or not. We just want this to happen the way we expected it to happen. And there's nothing wrong with that. So today I'll be telling you when to have that mindset and when not to. This has to do with application, how we apply ourselves in the market. Let's say, for instance, because of this move, let me use the arrow. Because of this move up, we want to continue taking buys because of that move up. So what this means is we'll wait for the pullback to break. And once the pullback breaks, we tell ourselves we've done the first way. Now, using the second way of trading, we need a particular thing to happen at a particular time. Now, we're going to tell ourselves that we would only take a trade when the high is broken. If this high breaks, then I'll take a trade. This candle broke this high, so we take this trade here. We go for 1 hour. Did we get that? We sure did. So while we're in it, we still keep telling ourselves that we'll keep taking every trade we see that breaks the recent high. We'll go for another 1 hour here. Both of them hit almost together. There was a pullback here, so we got other high here that was broken. Take this trade, go for another 1 hour. Now, in a case like this, yeah, there wasn't enough push away before we got this pullback. So in a case like this, I won't necessarily consider this to be the next high, but I will consider this to be the next high because before we got the pullback, there was a decent push to the upside. So this is what I'll consider. And secondly, the fact that we just took one trade now and we're getting another one so close to the first one would make me not take this. So I'll consider this as my next high. So once we broke this, we'll take this, place it. Normally I will place this here, but for the same explanation, there is not enough movement to the downside for me to consider this as the low. So I'll place this as my low just in case there's a pullback that goes against me. So I'll do this. So this pretty much is the second way of trading, a mechanical form of trading that if something happened, we're expected to do the next step. That's one of the easiest way to trade. But the only problem is you need to know when to apply this kind of trading. This is where you need to apply both. You can't apply this kind of trading here when the market is going down, simply because of this trend moving up. It's almost impossible to apply it here. If you apply it here, you're likely going to fail. But the moment you see that we have a reversal, that's when you start. So now tell me, if you're a trader, and you can guarantee some sort of profit from, let's say, when did we start? Let's say June all the way to July. If you can guarantee some sort of, profit, look at these 3 decent trades. You're getting 1 hour. Let's say you risk like 2K or 5K to make 5K. Won't you be more content in terms of, waiting for your setup to show for you to be able to enter such trade that you have a higher possibility of hitting TP than the other approach of trying to trade every single day, trying to risk 100 to make 1K or 2K? I don't know about you though, but for me, this seems to be a lot easier for me to do. It seems to be less stressful and more focused for me to do. So I can scale this up. I can decide to go with a bigger lot size, having at the back of my head that even though I lose, yes, because there will always be a loss. If we keep going, let's see till we get to a losing trade. This is the next high. So we take this, set this here, 1 hour. Okay, we still got this one. So let's see till we get to a losing trade. This is the next high. Nothing. No more. Let me see. So we break this. No more high. Okay, we broke it here. So my question or my point here is, if you know either that or this, if you know you can possibly make a decent return, but all you need to do, like this is the 4 hours chart, the 4 hours time frame. All you need to do is just to wait. You can easily just set your alarm here and wait. Once this is broken, you set it here and you wait. You set your alarm and wait. If you know you have, higher chances to make a better profit, but all you need to do is just to wait, don't you think it will be a lot easier for you to wait it out and see your setup to make that profit, as opposed trading every single day and trying your best to make 5 hours, 6 hours, all of that can happen, and the chances of it playing out the way you want are not as easy as they sound. But something like this that is mechanical, something that is easily repeated, but all you need to do is just wait. Wait till your setup shows. Wait till you get high probability trades. Don't you think it's a lot easier to go through this approach? Don't you think? Now, just like I explained before, there's a reason why you can't do it here, and that has to do with understanding properly the market flow. So let's say, for example, you actually try to do it here. Let's say you try to do it here. It still won't even work, because now you place this, you want to take a buy. because of this move to the upside, you're smarter and okay, what you need is buys. Let's say, okay, you even take the first one. All you need is buy. You assume the move started here and it ended here. So now you know to take a buy. So you decided to, take this one, the break here. You took this, place your stop loss here, and you aim for 1 hour. What happened? Stop loss hits. Stop loss hits here. You're like, okay, now I get it. It's not ready. So what do? You place your highs, you wait, nothing. It went lower. You place your high, you wait, nothing. It went lower. You place your high, you take this trade, 1 hour, stop loss hits. Now, after this stop loss, every other trade now moving on from here is simply a profitable trade. So the problem most people would always have with this approach is that they risk way too much. So if you're the kind of trader that you want your current trade to be the one that will break you out of poverty, like I used to say, if maybe you're risking way too much because you want to make the most out of one trade, then you might have problem. But if you're risking perhaps 1% or 2%, but you're risking decent enough to make a decent money, then why not? Why not do this? Why not lose 1, 2? Why not lose 1, 2 and then make profit 1, 2, 3, 4, 5? Why not? So yeah, I hope this video, gets to change your idea. Or if you don't agree with what I'm saying, do well to drop a comment. Let's have a chat and see how it goes. Well, until the next one, do have a profitable day.